So on this week's Watercooler Wednesday, we're going to be talking about the NFT tax update from the IRS. This is via Notice 2023-27. I'm just going to pull up a little presentation that Brian came up with. Go entire screen. All right. Just be easier to walk through this stuff because there was a lot that was covered in this. So I think it'll be helpful to go through. So yeah. So on March 21st, 2023, the IRS announced that they intend to issue guidance as to how to characterize NFTs that they are seeing, and they're saying seeking public comments through June 19th, 2023. So, excuse me. It's unusual for them to do it this way because they typically propose regulations and then they ask for comments. So this was kind of like sort of a different order for them. So it's a little bit odd, but they will continue. They will utilize a look-through analysis to determine whether or not an NFT's associated right or asset is a collectible under I.R.C. code section 408, subsection M. So why does this matter to us? So when NFTs are categorized as collectible, they're going to have a higher capital gains tax rate. So it makes a big difference. Also, some examples from the notice. Quote, an NFT that certifies ownership of a gem constitutes a section 408M collectible. For example, a right to use or develop a plot of land in a virtual environment generally is not a section 408M collectible, and therefore an NFT that provides a right to use or develop the plot of land in the virtual environment generally does not constitute a section 408M collectible. So we're looking at things that, again, it's another issue where we eliminate the crypto aspect of it all to kind of distill it down and demystify it and look through at, okay, is this a collectible? Like, does it make sense that this would be a collectible if we ignored the fact that it's a crypto asset, right? If we ignore the fact that it's an NFT, that's kind of the provision of the look through there. So the IRS is looking for comments regarding like what the actual definition of an NFT is, the look through analysis and factors to consider when determining if an NFT is a collectible under code section 408M, the application of code section 408M to individually directed accounts under a qualified retirement plan if you buy a collectible with a plan under a 401A, and then other guidance relating to NFTs that would be helpful. So this notice defines NFTs as a unique digital identifier that is recorded using distributed ledger technology and may be used to certify authenticity and ownership of an associated right or asset. They identify two types of rights. The right to a digital file itself, which is typically separate from the NFT that's just hosted on a server, like a digital image, a digital music, digital trading card, sports moment, or whatever. A non-digital right, such as a right to attend a ticketed event, or the NFT functions to certify ownership of a physical item. So section 408M 1 also provides that the acquisition by an individually directed account under a qualified plan under section 401A of a collectible shall be treated as a distribution from the account equal to the cost of the account of cost to the account of the collectible. So any questions so far? Any comments that people have? I know that Nick Farrer just jumped on. I know that he's been following this very closely. Welcome, Nick.
Yeah, thanks for having me. It's my first one, so I'm a noob. You guys have to bear that in mind.
Yeah, no, I don't mean to put you on the spot. I just know that you've been talking about this a lot. So at any point, if you want to jump in, just hop in, or you can raise your hand at the bottom or whatever. But feel free to jump in whenever you'd like. So
one thing that I noticed as it relates to 408M is like if you dig into the history of collectibles, the section 408M is kind of where the guidance is in the code. That's just where it ended up because of this individual retirement account rule that's in place. But I don't think it's actually that common. And guys, correct me if I'm wrong here, for people to be investing in NFTs through their IRAs, through their self-directed IRAs.
No, not from what I've seen. I don't think many people are doing it that way.
I do have a Bitcoin IRA, but I don't think NFTs, and that's all they do. I don't think NFTs are an option in the IRA.
I'm sure
Yeah,
you
so
can
I
do
don't-
something through a self-directed, but I don't know of many people that are taking advantage of that.
Yeah, so I don't know exactly like how applicable this IRA rule is going to be for investing in NFTs. It just so
Yeah.
happens that's where this guidance is in the Internal Revenue Code.
Okay. So yeah, so I mean, this section may not be applicable to a lot of people, but it might become something that down the line people may be investing in NFTs as an item. I don't know if they, it's not happening right now, but maybe it does in the future. So this subsection states that the acquisition by an individual retirement account, an IRA, or by an individually directed account under a plan described in section 401A of any collectible shall be treated as a distribution from such account in an amount equal to the cost such account of such collectible. So the IRS wants to look at NFTs for the purposes of qualified retirement plans. If you buy in a tax advantage retirement plan, the code says no, that it's a distribution, which could come with early distribution penalties. So if this does evolve into something that people are using within their IRAs, it might be more applicable there. Good item to point out though. So yeah, I'd love to hear people's thoughts on how this look through kind of will practically apply to those people who are maybe trading tons of NFTs and they're like they're mainly investing in NFTs. I wonder from a practicality standpoint how people think this might work out. And reporting, right? Because crypto tax is already very complicated. Like how much more do you think this is going to start to impact this?
Yeah, I mean, they're going to have to look at NFTs, whatever set of facts and circumstances they come up with to determine what is going to be a collectible and what is not going to be a collectible for NFTs or some hybrid version thereof. Plus, there could be a changing nature of an NFT. You know, if you add some utility that it didn't have before, it could go from a collectible to being treated normally for capital gains purposes. But yeah, I think it's just going to be more work and more substantiation of each NFT in your wallet that's actually not a worthless airdrop.
Yeah, I think some things may become collectibles later on, because something could be not necessarily considered a collectible at the time you purchase it, and then some event could happen where now people want to hold on to that as a collectible. So there is some fluidity there too. I think what this does is it solidifies the need for professional help in doing your NFT taxes. If you weren't already seeking it, it's kind of like, you need someone's professional guidance who knows about the rules that we're trying to apply here to be able to properly categorize these things and make sure that you're not paying these collectible taxes, these higher capital gains rates on items that you don't need to be, but also you're in compliance with those that would be considered as such. So speaking on the collectible aspect, I think, within the code, we have a collectible defined as any work of art, any rug or antique. And I mean, I'm not sure whether that would be, that could be considered something that's in a digital metaverse too, if it has some sort of value from that standpoint. A digital rug or a digital antique that was valuable in that metaverse could be considered collectible as well. Metal or stamp, but the ones that apply to more to crypto specifically are tangible personal property specified by the secretary for the purposes of this subsection. So a lot of jargon here, but basically, if there's an NFT that represents some tangible property that is a collectible by nature, that would likely apply here as well. So there needs to be a little bit more clarification, I think, here with regards to kind of what's encompassed by this, which I think is part of what they're seeking here in this guidance, and in the comment period as well until June. So as of now, collectibles are all tangibles. The IRS needs to look through the NFT to see what it provides the rights to determine whether it's a collectible, and they may need to consider adding digital art to the definition of collectible. So there is an exception for certain coins and gold bullion under section 408M3, but that's another topic as well. So what does this mean from a tax and a capital gain standpoint? So there is a 28% rate gain. For purposes of this subsection, the term 28% rate gain means the excess, if any, of the sum of the collectibles gain and collectibles gain and loss for the purposes of this subsection. The terms collectibles gain and collectibles loss mean gain and loss, respectively, from the sale or exchange of a collectible as defined by section 408M, without regard to paragraph 3, therefore, which is a capital asset held for more than 1 year, but only to the extent such gain is taken into account in computing gross income and such loss is taken into account in computing taxable income. So on the other hand, non-collectible assets that are capital assets held for more than 1 year are generally subject to lower maximum long-term capital gains rates, up to 20%. So it could be 0%, 15%, or 20%, depending on the taxpayer's income level and filing status. The lower rates are applicable to the most common assets, such as stocks, bonds, and real estate investments. So it makes a big difference here. 28% versus 20% on the high end is going to make a big difference to those who are very active traders. So this is a chart that shows those brackets that we were just speaking about. And 8% is not 8% additional is not nothing, right? So it has a large tax impact for people. So one thing we'd like to do as a community, and I think it would hold more weight coming from a community of professionals in this space, will be to collaborate, create, and submit comments by June 19th. So if anyone has any comments that they'd like to share on this, we can provide a Google form where if you have some suggestions for how they might be able to tweak this to make it more fair, or if you disagree with it completely or whatever, we can kind of have that so we can aggregate some responses to this, because I think that they seek this guidance so that they can inform how they're going to make these regulations, and this one can be a big impact here. So we can put together a facts and circumstances analysis to help the IRS determine if an asset, NFT collectible, if it has some utility tied to the underlying asset, should be not deemed a collectible. So, if it's technically a collectible, but it also unlocks a utility, does that exempt it from this additional tax rate? Or, how would that work in that instance? Because there are some things, like the Board Yacht Club NFTs, for example, those could be considered a collectible, but they also gain you access to their exclusive club. So if it also gains you access, does it still fall under this rule, or how do we determine those two distinctions there? And maybe something can be classified as both. So in such a case, which tax treatment do we use, right? So those are the kind of, I just wanted to go through the facts of this so that everyone was up to speed about like kind of what this said, so that now we can kind of talk about like how we see this impacting the community, how we see this impacting our own workload, and if this is realistic to be able to implement. And I know the community doesn't always, care how realistic it is, but it's gonna. I think for those who are heavy NFT traders, this can be a much bigger burden for them, right? So would just love to kind of open up the floor if anyone has any comments on this or any clarifications or anything like that.
Do you think maybe we should review Stacy's hierarchy? Just for those that may not have seen it, maybe we can kind of bring that into the discussion as well.
We can, yeah, for sure. I'll need to find it and pull it up, but
Yeah, just go to the accounting forum.
oh yeah. Okay. 1 second.
I think that definitely ties into the discussion.
Yeah.
I wish she was on the call.
It adds,
Yeah.
it adds more branches to our hierarchy.
Yes, yeah. Maybe that's why she's not on the call.
Well, no, it's on. It is no. Collectibles are on her hierarchy.
Yes.
So yeah, for those of you who don't know, Stacey Ferris, she's a CPA and a forensic accountant. She wrote an article for the Journal of Accountancy that's being released in May, and it was a digital asset hierarchy that breaks down digital assets into different classifications based on their different accounting treatments. So I'm just pulling this up real quick just so that we can take a look at it, because she has her draft article in here as well. And she breaks down every category and kind of the different accounting treatments for them. And so this is not obviously not from a tax perspective; it's from an accounting perspective, a GAAP perspective. But I'm just going to pull open her draft. So this hierarchy has changed slightly since she submitted this to the community. She moved the CBDC structure up into the same tier with the fungible and non-fungible crypto assets, but a little bit hard to see on my screen.
You can hit download, bottom right.
Oh, okay, here we go. Cool.
And you just pop it up.
There we go. The tech guy is on the call.
I'm not just here for my good looks. You know, this madness to my
So I'll jump down into the section where she talks about NFTs, because I know that it's in.
You just gotta share.
Yeah, can you zoom in a little bit too?
Yeah, he's gonna.
Yeah, I'm gonna.
Perfect.
Put it on a new screen.
So the thing is, right? So correct me if I'm wrong, but if you're in the 0% capital gains rate, right? Because you're married filing jointly, you make less than like 80,000. You're not paying any money on long-term capital gains. If it's a collectible, you're paying the 28%. So
not necessarily true.
Is that not how it
works? So it's a maximum 28% rate. So it'll tax at your ordinary rate if it's below 28%.
Okay.
Okay.
Got it.
So I'm gonna just scroll down to the section where we talk about.
I don't think I've ever put a collectible on a tax return.
Yeah, you and me both.
That's gonna change.
So I don't know whether she would kind of throw these into. Well, she has a classifying unusual NFTs, so DAO NFT tokens, semi-fungible tokens. So I think it would be under her ownership NFTs. And I think this would be a subsection underneath the ownership NFTs, because the Beeple, she uses Beeple's first 500 days project. So again, this is going to be an accounting treatment, not necessarily tax, but I believe that it would under her classification, her digital asset hierarchy, these would fall under the ownership and NFT category here. But also, as she says, they can be used for authenticating and validating all manner of digital objects in a range of traditional web and virtual reality spaces.
Yeah, so there's a lot to think about with her hierarchy. Looking at single use NFTs too.
I don't know that I necessarily agree that they'll be taxed as securities.
The collectibles.
Yeah, I mean the IRS has been pretty clear that crypto is not a security. Crypto assets.
Yeah, I mean they're intangible personal property right now, and I don't think that's going to change for the IRS.
But I guess you're saying this is for accounting purposes.
Yeah, this is more for like
Financial
gap and that sort of thing. So there are going to be differences with that.
Yeah, and the FASB exposure draft that they just released doesn't include NFTs. So, like Brian just said, they're going to be long-lived intangibles still.
Yeah, and we're actually going to do next week. We're going to talk about that. We're going to work on a response to that as well. So if anyone wants to be a part of that, that's going to be the topic for next week. So, yeah, this is just kind of helping us identify the different classes of again, accounting treatment. But I just wanted to pull this up as reference as well. So, good point, Nick, about the fact that it's a maximum of 28% and that it will be determined by your ordinary income tax rate and where your ordinary income is for that year. So, but again, if you are in that zero, if it could go from 0% because you're making 80,000 or less and you're in all long-term cap gains, and that ends up being classified as a collectible, it goes from 0 to, it wouldn't be 28%, but it would be, a very significant increase above what you were expecting, maybe based on historical treatment. So important to keep in mind, important from a tax planning standpoint for your clients as well, to start to, and I think it's going to mean that, not only are we as tax professionals going to have more legwork to do, but more and more clients are going to need to come to us to get this stuff right, because you need to have that insight to be able to properly classify these things and not be misclassifying items as collectibles that don't need to be. So I'm interested to see how the tax softwares will start to capture these aspects as well, because that's going to be a big challenge. Has anyone, I mean, obviously this just came out, so is anyone aware? I mean, I know that Cryptio does a lot of accounting stuff, Jeff, but do you guys have any insights on how this might impact your product at all?
We just rolled out an NFT module. I have to be perfectly honest. The NFT piece is something I need to catch up a lot on. I mean, there's a lot of different things, from like minting to burning to, I mean, just making sure that NFTs are treated the same as everything else. That's crypto. I mean, we've taken everything into account the way we think it should be done. But I would say I'm not the expert right now on NFTs. We have some blockchain guys here that know all the moving pieces of NFTs, all the complexities. I would say I'm more here to learn and just soak it all in.
Cool, great. Yeah. I mean, so I think
know,
this
like,
is going to be. Yeah,
I know there's different ways to market. We give options for like the base price, the most recent price. There's different ways to price these things. There's flexibility. So I think all this stuff will give more certainty into what we need to do, instead of giving the option to how you're going to price all these things.
Yeah, I'm interested to see how the tax software starts to roll this out, because I mean, I'm guessing you just have another drop down window where you classify it as a collectible if you need to. It would just be another classification, but it's going to be hard to navigate this on your own as a taxpayer.
I think one thing that may make it easier is that if you keep in mind that any short-term gain or loss is going to be taxed at your ordinary rates no matter what anyways. Mm-hmm. So the collectible doesn't really change things if it's a short-term gain or loss. So we're really only considering those long-term gains or losses, and those guys that are trading these NFTs all the time, it's not really going to impact them very much.
That's true. Good point. Yeah, that's a really good point. Interesting. Yeah. So those were the main kind of points that I wanted to hit on. I didn't know if anyone else had any other questions about this or any things that they're thinking about moving forward. Was anyone surprised by this? Nick, were you surprised by seeing this, or was this kind of like in line with what you were thinking was going to happen?
To be honest, no, I wasn't surprised at all. I think it's pretty in line with what I was thinking that they were going to come. Honestly, when I got an email from somebody said, "Hey, IRS just released new guidance." I was like, "Oh, cool! This is going to be the 1099 DA regs," and it's on NFTs, and I'm like, "What is going on over there?" But no, it was pretty in line with what I was expecting.
Yeah. I mean, that's the point, right? Of a lot of these are, I think a lot of us had the collectible aspect on our radar, and we were just, kind of looking for more insight from the IRS. I think that ultimately, right, that's how they're marketed a lot of times as collectibles. So it's like the fact that that label is slapped onto these, it's like not all that surprising, but I think that I think people are more surprised at the agenda and the priority list that they're going through over there than anything.
So what about sorry, chiming in here. Here's a great example of a let's say what you would envision as a collectible NFT. So like membership NFTs. Perfect example is Link's DAO, right? I don't know if you guys have heard of it, but it's probably I'd say the most renowned, let's say, membership NFT, right? So it's a golf DAO, and they actually just recently bought a golf course in Scotland. It was created by Mike Dudas, who was the founder of the block and left the block, and created this Links DAO group. But yeah, they have like 3 membership tiers, and you buy people buy and sell the NFTs on OpenSea. And if you get like their global membership tier, it gives you access to certain discounts within, like they have discounts with golf suppliers like Callaway, Nike, etc. on like golf equipment. They give you like discounts and benefits like to go play at Top Golf, and you get discounts on certain golf courses throughout the world. So long story short, that's like a true utility membership. Like, right? Like, so it's like joining a club, like your local, whatever, social club or golf club or whatever, and being able to trade that membership amongst like the global community, right? So that's something that nobody's looking at as like, oh, it's not like a piece of art or something that you're holding, like a baseball card collection, right? Or digital baseball card collection like NBA Top Shots or anything like that. So I wonder if they will get into like distinctions around, or if anybody's heard anything around distinctions around, like, if you want to call it true membership utility NFTs versus, but I mean, I guess people can argue that Bored Ape Yacht Club is like a membership. It's like a social club. They do meetups. Like I know On Chain Monkey, they do like meetups at different crypto conferences. So you have, let's say, quote, like membership benefits to get access to these parties or meetups or whatever throughout the globe. So it's like, where does the line get drawn on like membership NFTs versus kind of digital collectibles?
Yeah, and when you mention that, like the Links one, let's say you have, the first one issued, number 1, right? Now, or just a rare one. They may be all the same. Some of the utility ones, like Fly Fish Club, everyone looks the same. There's nothing special about the design. But if you have like number 1 or some rare one, and all the value in it comes from the rarity or it being number 1, like number 2 could be, $15,000 for the Links, and number 1 is, because it's number 1, it's $100,000. Do they say, well, it's part collectible, part utility, and how's the IRS going to treat that?
I think that something like the Links, Links DAO, I don't think that would really fall under the collectibles aspect, because you're buying it for the utility of it, right? Like, and a very small minority of people might be purchasing them for some sort of anticipation of an increase in value just because of the being a part of something that's one of the early projects. But I don't think that that's necessarily the main use case for people who are buying those. And I think it's Brian mentions Flash Fish Club as well. I think it's the same with Fly Fish Club, where if there's a clear utility to it and there's a clear use case, in my opinion, I'm guessing that those aren't going to be seen as collectibles. I'm thinking that it's going to be more things like CryptoPunks, for example, or things like that are. I mean, I'm not sure. I'm correct me if I'm wrong. I don't think that CryptoPunks has any additional utility other than, owning a CryptoPunk. But things like that, where it's like Women of the World. I don't know if they have a utility tied to theirs, but if it's just strictly the artwork and it's digital artwork that you're, holding on to, I think that those are more
Right.
dry.
Yeah, and that's a good point on like rarity traits and stuff where I think like obviously like WoW or World of Women or whatever, that each of them are like there's unique traits to each World of Women NFT, right? Each one has kind of is a unique identifier, whereas like the Link Style membership, it's like 3 tiers, and literally like there's no, it's just like a membership tier. There's nothing special, I don't think, if you hold like number 1 or number 5,000 or whatever. It's just like, okay, you're on the global tier. It's like the NFT is just the NFT that you're in that level with no like rarity traits or whatever associated with it, right?
I tend to agree that like the Link Style probably, when you look through to that, it's probably not collectible. But one thing you have to keep in mind too is that club dues are not deductible. They're not deductible at individual level anyways, but if it's in a business, it's a non-deductible expense too. So not necessarily a good answer there either.
Yeah. Okay. Good point.
But what if you sell it for a profit?
Yeah, I think
Like,
I think
you buy it
that
for half an ETH and you sell it for like an ETH and a half or something.
yeah, I think the tokenization of it is probably going to be considered a capital asset, and then you'd have to pay capital gains on our collectible gain rate on that.
Yeah. Interesting. Yeah, I mean, I think at this point, I don't think it's but to your point with like a hybrid thing, Nick, what do you think about like something like Bored Ape Yacht Club? Do you think that would have a collectible nature to it, or maybe a hybrid nature to it?
It's a good question. There's just so much gray area. I don't know.
Yeah.
It's hard to say.
Yeah.
I mean, like if you were going to propose something that is not only reasonable to the taxpayer, but also like reasonable to tax preparers, and is not like overly burdensome on tax preparers, like what would you propose, especially for people that are trading these all the time?
I mean, the simple answer would be, I guess, to say that like if it has some sort of utility, then that would be not considered a collectible. But then if you open the gate to say like, just some arbitrary utility that you could just say is attached to it, which doesn't really actually exist. So yeah, I mean, it's a challenge. I mean, they're going to need to have some sort of test if they want to have a collectible nature to utility to NFTs. You're going to have some sort of test to see whether there's substantial utility. I guess. I mean, that's my only thought. Then that becomes burdensome to your point.
Without guidance, I think right now, if you have a situation where you don't know, you have to disclose it on the tax return if you're not taking the conservative approach and treating it as a collectible.
Yeah. So in the Bored Ape Yacht Club case, you would probably, do exactly that as Brian's describing. Although I would say that you would have a better stance on Bored Ape Yacht Club to say that, just simply because it gets you access to the community. I don't know, I mean, people literally bought those so that they could get into a club, right? So I do think that there's some argument there, because you're getting in with all these celebrities that are co-owners of this project. So I think that that's an example where it's less gray. But to your point, there's a lot of projects that are very gray that might be more challenging to put a test to. Yeah, it's funny. They issue guidance, and it almost puts out more questions than answers to some degree.
Technically, it's not really. It's guidance that they're going to be issuing guidance. It's like reverse order. You know, like you said, they came out with a notice asking for input before they put out the proposed regulations, which is the point they usually ask for.
Yeah.
Public comments. So they're trying to get us to do the heavy lifting.
Yeah. So I guess what would a substantial utility kind of test look like then? So if you're looking to assign some sort of substantial utility,
fair market value of the service if it was provided by a third party that wasn't an NFT might be one way to look at it.
Okay. And what would be the? I mean, I guess it would have to have some above nominal value, at fair market value. And then what's that threshold, right? Like, because if I can attach a utility of $1 to something that then someone can no longer have to classify it as a collectible, is that sufficient enough, or does it need to be, $500, $1,000?
Well, if an NFT is not being manipulated, and there's a significant quantity of them, and it's pretty much provides access to something, then it almost sets the fair market value, whatever the current price is.
Yep.
So it kind of takes care of itself.
I think that the challenge there, though, is how do you assign the value that's associated with the collectible aspect of it, right? Because like in the Bored Ape Yacht Club example, there's I guess it's hard to say what portion of it is tied to the utility of being part of the club, and what portion of it is tied to the actual artwork. I would argue that it's more of the value is associated with the club in the Bored Ape Yacht Club case than the actual artwork. But that's more.
Well, most of the value is speculation, or was speculation at some point.
Right. So I guess, it's not necessarily our job to develop the test that they need to do, but there needs to be some sort of test to evaluate the utility of the NFT, so that practitioners can say, okay, or maybe it's just blanket if it has utility above and beyond being artwork, that it's no longer considered a collectible.
Yeah, hopefully they make it simple.
Yeah. So maybe we'll put together a forum. So if anyone wants to put some input forward, we can create kind of a response to this, so that we can have some sort of feedback to the IRS, because I think that making this doable from a practitioner standpoint is key, because we're all going to end up having to handle this in the future. So making it manageable is going to be in our best interest. So
absolutely.
Cool. Well, those are the main things. If anyone has any other final comments, we can end this a little bit earlier than normal. But yeah, interesting kind of pre-guidance from the IRS here. So we'll see how this all works out.